Hello everyone, I'm Kevin Piepgrass, COO for LithiumBank. We're going to go through about how we are developing the largest portfolio of unconventional direct brine lithium projects in North America. We used to start with a slide that was trying to convince people that lithium was going to be a thing and EVs were going to be a thing, so we've moved beyond that. We hope to move beyond this slide soon. We've kind of gone through with the other presentations about where lithium comes from. We see the next generation being DLE, which I think a lot of people are interested in here today, obviously. The advantage for us is that these are North American based. These are large production capacity resources. They have short development timelines. They're quick to permit. And they really have a low environmental footprint, surface footprint, and water consumption, and all those things that matter. We see this as the next generation. So LithiumBank, we have, we'll go through basically what we see as the main focus for our company and what we see as a direct successful brine project. One is scale, both in resource and the ability to produce at scale in a great jurisdiction. And the other, of course, is the DLE technology itself and having something that works for your brine. And we've got an exclusive DLE license that we'll talk about in a bit with a company called COO Lithium Greenview Resources. We'll just call them COO Lithium from here on in. It's a long name, but it's a conclusion of over 2 years, 2.5 years actually of DLE test work using Hatch as our third party to vet all the test work and coming to a conclusion that this is a very efficient technology to continue down the road with. And of course, the other important thing is the experience, both in the companies we associate with, such as Hatch, Schlumberger, COO Lithium, Azetis Technologies is a Calgary technology company we'll talk about, and Invest Alberta, and the management of the LithiumBank ourselves. We have a very experienced team in technical and capital markets, and of course, Paul Matisic being our chairman. He's successfully taken 6 public companies that have been sold to majors, and all those companies are either construction or production. So he's very experienced at that. And our catalysts going forward, we've completed a PEA. We intend to update that PEA with our new technology that we'll talk about. We're going to be pilot testing at a large scale, at a 10,000 liter per day scale. And of course, upgrading our resource through additional drilling and sampling, and our Park Place asset as well with sampling and resource estimation and piloting. So Alberta, great jurisdiction. Obviously, we all know it's resource driven. It's low risk. It's a great jurisdiction to be in. Salars are getting more and more politically troubling. With taxes, you're dealing with high elevations, you're dealing with infrastructure, lacking of infrastructure. Alberta is fantastic. It has tons of infrastructure, local talent. It's considered brownfields. There's hundreds and hundreds of wells in our reservoir with rail. The Alberta government itself has been very proactive in the last couple of years. They've added additional legislation to allow for permitting, and including Bill C-80, that was Bill C-82, and directives that are in line with the Alberta Energy Regulator, the AER, to allow for permitting brine-hosted minerals, aka lithium. We continue to work with the government. We're part of these directives and enhancements in the government. We're continuing to working with them for additional ways that Alberta can maintain their competitive advantage in the world, and the quickly advancing, say from Ontario and Quebec, the government continues to add incentives. We're working with Alberta to continue to keep Alberta competitive in that regard. So Boardwalk, one of the larger size projects out there for brines, 6.2 million tons indicated and inferred. We have a very large production rate plan for our proposed in our PEA, over 31,000 tons of lithium hydroxide over a 20-year period. It gives us a $2.7 billion NPV and a $586 million EBITDA. This project, we'll go through the PEA numbers on the next slide, but this project is one of the simpler land packages out there. And I would say simple projects get built first, because this is, we've consolidated the entire reservoir. There's no freehold royalties in the area. It's completely 100% crown minerals. There's no carbon sequestration overlap. There's no active oil and gas. So there's no other activity in the area, which sounds bad, but it's actually a great thing because you're not worried about pressure changes, you're not worried about anything. We have a high confidence in our resource. We're going to improve that with another well. And so it's a very simple land package that we consolidated. And of course, we'll talk about the technology in a bit, but it's obviously a very important piece of the puzzle. So our PEA that we published in March, it's a baseline PEA. Price of 26,000 tons. You know, the price has come off on lithium a little bit, but that's still a reasonable number. You see Standard use of $30,000 a ton recently in their feasibility study. Of note, our OPEX and our CAPEX. Our OPEX is about 6,900. We're going to go through on the next slide some enhancements where we see we can improve that number substantially, as is our CAPEX. And our CAPEX at $2 billion, it's important to keep in mind what that number means. That's a 2023 number. Those are pre-inflationary numbers. You can't compare that with anything before that time. Everything has doubled in price. Cost to drill has doubled. Cost of steel has doubled. All those things. So it's a real world number, but it does not include any infrastructure. So there's no, you know, we're not sucking off anyone else's oil wells. We're not using oil companies and saying we're taking their water. This is all brand new wells, brand new infrastructure, brand new everything. So you can imagine there's a lot of enhancements we can make to bring this number down. It also includes building our own power plant because power in Alberta is very expensive, also by 30. And if you watch Daniel Smith, there was, you know, price spikes and not enough power, and people got to cut the power. You know, it's got to be more natural gas. So we said, okay, avoid that. Let's have constant power at a constant price. Let's price in our own power plant, which we've done, which is about close to a $200 million build as part of that CapEx. So the enhancements we see, you know, obviously repurposing old infrastructure will bring down that CapEx number. We're looking into that. It takes a bit of time to work with stakeholders to go through well files and all that sort of thing and get those deals. That'll be kind of probably more part of a feasibility level study. The government ITC, we're waiting for that to be totally enacted, and when that is, we can apply that to our financial model. That's a 30% tax credit on direct capital expenditures. When you look at our CapEx from the PEA, it's about $1 billion in direct, so plus contingencies, right? So you're looking at potentially a $300 million tax credit, but that's industry-wide, right? So that's fantastic for all projects. One of the big triggers of updating a PEA would be the actual new technology with GoTo Lithium. The previous PEA used a different technology, a resin that used Hatch's design. GoTo Lithium has a resin and a proprietary direct lithium extraction, which is an ion exchange system that they've used for several decades. So that's the main trigger by updating a PEA. That brings down the operational costs, probably south of $5,000 per ton. We're looking at incredible improvements on that. And the reason for that OPEX improvement is because when you look at the OPEX, it's 54% reagents and resin. When you switch out for different reagents, so the unique thing with this GoTo Lithium is that we can use different reagents and maintain the same level of recovery and concentrations of lithium in the eluate, in the concentrate after the DLE, and actually have a more pure eluate than we had before. So having lower cost reagents and having a more pure eluate saves on the OPEX substantially and decreases the equipment needed downstream for further purification of the concentrate.
Is it easy to explain? You know, like some people are using Koch's technology, some other people have their own proprietary. You guys are using G2 lithium. Like, what is it easy to explain to us?
Yeah,
a difference or not? If it's too hard, don't do it. It's
no,
okay.
no, it's not. I can keep it very simple. So, like I said, we've been working with Hatch for over 2 years now.
Yeah.
Testing multiple different technologies. We've tested absorption. There's solvent extraction. There's ion exchange, and then I mean every ion exchange is different. right? And it's not just the resin, it's how you use it. And how, so there's a lot of customizations for every single brine. So it takes time to go through all that. So we tested with absorption, and we've looked at different absorption technologies like Coke and like other people. And what we found is why we like the ion exchange is because in a single step, you can high grade your concentrate much higher in a single step than you can with absorption, right? So I don't know what E3 is using on the results that they published. I don't know if they've mentioned it, but in our PEA, our LU8, our concentration of elemental lithium was north of 3,000 milligrams per liter, which is quite high grade. And so we have that similar recovery and concentration in this ion exchange, except for the impurities are much, much less, which is phenomenal. So some of the other, so that's a 45 roughly times increase in grade in LU8, where some of the absorption stuff was like a 10x or a 5x increase in grade. So you imagine you bringing up a lot of volume of brine, the more you handle large volumes, the more expensive it is. So if you can get rid of a lot of volume of brine in a single step, well, then I think the downstream is going to be significantly cheaper. So you might pay up a little bit more on the upfront, but the downstream will be cheaper. So that's why we prefer the ion exchange with these grades. I think like if you have a standard where you have higher grades, then you can afford to have the absorption. Anyways, that's been our findings.
Okay.
Interestingly, on a side note, on our system, using different reagents, we actually produce. You're always going to produce some sort of physical waste in this, right? Because you're pulling out a lot of minerals. One of our physical wastes is like a very pure gypsum, which probably will pay for itself on removal. It's an interesting side note. I like it. And so it brings me that because of ZS2 Technologies, we partnered with them to kind of combine technologies. They do a carbon capture, which they can apply on our power plant. And they use that carbon and they sequester it into the brine, which precipitates a magnesium and carbonate, or magnesium calcium carbonate, which they use in their cement products. So they build prefab cement boards for construction. They're load bearing. They do tiles and all sorts of things. But they want to source their magnesium and calcium from brine. And so we've been piloting with them for 8 months now to use their technology with our waste brine to pull out magnesium after the lithium's been pulled out. So we're going to be producing magnesium, calcium, gypsum, and of course lithium on side notes as extra streams. So producing carbon credits as well from the carbon capture. So Boardwalk, we're looking at a 12-month path towards a feasibility report. That includes piloting early next year, getting additional information from the reservoir from drilling and sampling, which will give us an updated resource, which we'll put into a pre-feed study. Park Place is our second asset in Alberta. It's by volume about 5 times larger than Boardwalk. Historically higher grade. Our first sample came back at 77 milligrams per liter. We're testing other well bores to get other grades. We should have that done early next year. And we've engaged with Schlumberger, SLB, to do the subsurface reservoir modeling and to prepare a resource estimate, 4211 resource estimate. We've obtained 3D seismic, and if you know oil and gas, 3D seismic is an incredible piece of data that will give us very, very high quality reservoir modeling and a Schlumberger style resource estimate. We expect to get some M&I on that probably on the first go round. And of course, having the luxury of coming second, we have technology that we can put it to a pilot plant immediately and get to quickly to a PEA and as well as a pre-feasibility study. Of note, Schlumberger has a big investment into other technologies, ESM and Iliad and those things. So they are, they want to test that with their technologies as well, and we're happy to do so. We continue to test with multiple technologies. So there's the time frame towards a pre-feas for Park Place. It's about 6 months behind, just so that we can get that initial resource estimate underway. And that's just kind of how the two projects measure up. Having this large-scale pilot plant allows us to get quite a high quality of data. It'll be beyond a pre-feasibility study data set. We'll be able to apply that to a feasibility level study. And by 2025, have a construction decision on Boardwalk. So the technology, I haven't really talked about it too much yet, just a little bit. So this is the it's an ion exchange system, and it's, like I said, it's 2 years. It's Hatch being the third party to verify all the test work. And this is an exclusive licensing agreement we've signed. It's a milestone agreement for shares, 4 million shares on signing, 3 million on the first milestone of delivering a 10,000 liter per day pilot plant to Calgary, and it working, of course. So, running 100 hours of brine testing continuously would be a successful first milestone in that. And then the next milestone wouldn't be till after 18 months of piloting, and that's our decision if we want to continue with that licensing agreement. We still feel that is the best technology for us. It's exclusive to LithiumBank in Alberta and Saskatchewan. One of the other groups here can use this technology. And Go To Lithium is it's a joint venture company. So it's a shell joint venture company between two groups. One is Computational Geosciences, which is the R&D arm for Ivanhoe, Robert Friedland's company. And the other part of the joint venture is a company out of Australia called Clean Tech Water, which is also majority owned by Robert Friedland, funny enough. And they are a commercial ion exchange company. So they do ion exchange for uranium. They do commercial ion exchange for cobalt, for nickel. They do desalinization. They do tailings water cleanup. They're a water processing and ion exchange company, and they've been doing that for decades. So the pilot plant we're receiving is a pilot plant that they've used on another ion exchange project. So it's currently being refabbed for brine as opposed to a slurry. And we should get that. It's going to be on a boat, expecting to be on a boat in November, be in our Calgary warehouse sometime Q1 next year. And that pilot plant has been used to take a project from the scale pilot to a commercial project. They've done this multiple times. We get the expertise of their team. They have over 20 years of building pilots and developing them into a commercial scale project. So this doesn't just come with a licensing agreement and a pilot plant. It comes with years of experience building these things out at commercial scale.
What's the picture of?
That is one of their ion exchange facilities. I don't know which one it is. It's from their website. I can tell you. That's the rendering of the pilot plant. They're just giving it a paint job. When they get the paint job done, we'll get a new picture. So I guess that's the timeline. Install and commissioning, December, January, February. Customs is always a bit of a black hole, but we expect that to be somewhat smooth. And then piloting Q1 2024. Really excited to do that. It's a big milestone for the company. This is it's a substantial size pilot. We'll have over 200 liters of concentrate every 24 hours of running this thing. So we'll have plenty of concentrate to test the downstream technologies as well.
So when you test it down, like when you use lithium and you want to have it tested, who are you gonna, are people lining up to test it yet?
Yeah, so
what's happening?
They're not lining up yet, probably not until we. So we have early engagements with these groups, and they're certainly interested in running it and seeing how well it works with our technologies. And there's multiple different ones. So we'll be doing a lithium sulfate from this, and so lithium sulfate is a bit more common because hard rock mining develops with lithium sulfate. So there's quite a bit of optionality and a bit less risk, I'd say, with the downstream part because it's more common in the hard rock field. Because really hard rock makes a brine essentially, and then they process it. You grind it, make a brine. Generalizing a little bit, but there is some optionality, and we are in the stage of lining those up for downstream. So in our portfolio, we also hold 3 significant Saskatchewan projects adjacent to Grounded. kind of in their checkerboard, right beside EMP, which are doing a great job drilling and getting some really high grade numbers. And of course, right beside South. So we picked up these assets because they're in great neighborhoods. There's a lot of proven grades in the exact same geology or very, very near geology. We know the geology, of course, extends on our grounds. And so to keep our capacity focused on our Alberta projects, we decided to put this into a company called Pristine Lithium, which we announced in July. It maintains us to have 47% ownership of Pristine and $2 million cash once it closes. So that's in process of they're working on that deal right now. So our DLE process, if you haven't seen one of these already from today, brine comes up through ESP pumps, electrical submersible pumps, gets fed into a pre-treat. Of course, being an oil field brine, we have to consider hydrocarbons and H2S. That has to be removed before it goes into a brine. And from that pre-treat, it goes into the DLE. With our DLE at Go-To Lithium, it will go into an electrodialysis type system to get more purification done. And the spent brine, of course, will go back down into the Leduc. It could also go down into other formations. We have optionality there. And of course, the plan is to come up with a lithium hydroxide battery grade product at the end of it. So our biggest peer, our biggest compare in the space is E3 Lithium, mostly because of the geology. I'm a geologist background, and when you look at the geology, you will find that it's remarkably similar in most of its aspects, the grades, the TDS, the temperature, the pH, the thickness of the reservoir, the depth of the reservoir. All those things are very, very, very similar. So anything that they do in a feasibility of pulling the brine out, all the stuff, the front end stuff to get the brine to a DLE prices will be very, very, very similar to E3. Differences there being they have been one of the first movers. They've developed their own ion exchange, and they have obviously started piloting this summer and seen some substantial gains from that. Big CapEx, big market cap difference. We expect to close that gap as we continue to pilot and de-risk our asset.
Do most of these brines have H2S?
Yes, yeah, all the Leduc brines have H2S.
All the Leduc do, and then what about in Saskatchewan? Do they have it there?
Much, much less.
Much less?
Yeah, yeah.
Okay.
Yeah.
Is that the biggest thing you have to treat? Is that?
Yeah, you can. I mean, it's dangerous, right? So you have to take care of that. Yeah. So I think Saskatchewan has much less. You'll still have to treat for it. I don't think they'll get away without treating for it. But substantially less. Yeah.
Okay.
And there's still hydrocarbons in that reservoir. Right. It's not great for oil and gas production, but there is still hydrocarbons in there. Yeah.
Okay.
And one of the interesting differences is the permit type. We have Crown land 100%. E3 is 55% Crown, 45% freehold. So there's the value creation. Obviously, Standard Lithium being the first kind of mover for the oil field DLE space or the unconventional space, working on their demonstration 5,000 tons of LCE a year. Hope that it's very successful and we'll start seeing the de-risking of the DLE. E3, of course, starting their piloting and starting their pre-fees, and we are closing the gap on that for sure. So our share structure, we've tried to keep this very tight, as tight as possible. What's not on here is our recent $3.5 million raise, which closed Friday. So that would bring us to almost exactly 50 million shares outstanding. That came with the half warrant as well. So another 1.75 warrants on that. 35% ownership. The raise was 27% insiders on the raise as well. So we're keeping a very strong insider ownership in this company.
there any notable institutions that are public or?
No, nothing big yet. Too small.
So 57 million shares outstanding and stocks $1. Okay.
So we try and engage with the best, kind of talked about these guys. Schlumberger obviously needs no introduction, Hatch as well. Global leaders in hydrometallurgy and process engineering. ZS2 is a really, really smart company. They're private, but they're worth a look if you guys are interested in that green concrete space. And Go To Lithium, obviously, very, very smart group of engineers and been doing it a long time in the ion exchange. And Invest Alberta helps us with investment capital and working to move this project forward in Alberta. Our team, we talked about Paul and Rob and myself, Hard Rock Geology. We definitely have oil and gas geologists on our team. John Lamont is our VPX. And our board of directors there, you might recognize a few names, but all very accomplished in their fields. Very strong, very active board and management team. And I'll leave it there if there's questions.
Yeah, just a reminder, if you are listening virtually, you can ask a question in the forum and we'll be able to read it on our end.
Is Go To Lithium partnered with anyone in the States? You have the Alberta and Saskatchewan.
No, not that I know of yet. No.
Can you just quickly, sorry, I may have missed the detail of the start, but just quickly outline like how that came to be, the partnership there? And I don't know if you're able to disclose like how metrics behind that or how that works exactly.
Yeah, so it's an all share milestone based. So part of the agreement is we get the exclusive right to use that technology. We get their expertise in developing it at commercial scale and piloting. We also get the physical pilot. So we're not spending a dime on building. We're not spending 2 years building one and engineering one. So that pilot is coming, by the end of this year or early next, and that's built into the deal. And so the milestones is built on. So say everything goes totally wrong, the worst we're in is 7 million shares. But everything goes great, we're 14 million shares.
Have there been many discussions with Friedland, given that he's the owner of both of those? I don't think he has a DLE.
Well, Paul has worked with Friedland. Friedland, I think, has been on the chair of some of his companies. So I imagine, I haven't been in those discussions.
Yeah.
I'm sure he's well aware of it.
Yeah.
Anything else, Dave?
Oh, it's,
You heard it.
I've heard before. Obviously, we've heard several people talking about doing contaminants other than just hydrocarbons. That seems to be what everybody comes to. But, the magnesium and calcium and all that.
Well,
Do you worry about it or other things other than just
well,
hydrocarbons?
that's the DLE that we're using does a very, very good job in the DLE. So the pretreatment, we see the pre-treat as just the getting rid of the nasties of H2S and potential hydrocarbons. The DLE takes care of the majority of the magnesium, calcium.
That's why it's going into the company.
Well, that's just an added bonus, right? So we take out, the ion exchange is very good at selectively taking out the lithium. It comes with a few impurities, but that's why a lot of people, a lot of those grades that people are getting are going to have to go through reverse osmosis or different times of reverse osmosis or different levels of impurity before you can get to like an electrolyzer or something. So there's multiple steps after the DLE. But with our DLE, we haven't contemplated, say, removing additional magnesium. There are ways that we've looked at, but we haven't done that. We feel this is, so far what we've seen, this is the most cost effective.